Hello, ladies and gentlemen. Welcome to the first episode of the Accounting Podcast, where we talk about all things related to running a profitable accounting practice, the trends and technologies surrounding the accounting and advisory industry. I'm your host, Sushil Basnet. In today's episode, we'll be talking about strategy. Do you have an overall strategy guiding your firm or your client organizations, or have you just been involved in formulating plans and calling it a strategy? Our guest today thinks the way we approach strategy is flawed and that it is reflected on the failures of so-called airtight strategies of companies both large and small. He has written a book called The Emergence Approach to Strategy, Adaptability, Design, and Execution. Join me in welcoming our guest for today, Peter Compo, who will help us look at strategy with a different lens. Peter, welcome to the podcast.
It's good to be here.
So, Peter, let's start with why should anybody care about strategy in the first place? And who should care about it?
I think most people would answer that everybody should care about strategy. Most of the time, the debate is, well, how to do it and what is it? You know, do you really need a serious strategy? Do you really need a process? Or can you just write down a few things and then go get to it? I think that tends to be the bigger debate rather than whether you need a strategy at all or whether strategy is important at all.
So this word strategy has been used for many years, from war to corporate strategy, and there have been books, hundreds of them. So why did you write another book on strategy?
That is a good question, considering how much is written about strategy, not only in books, but journals and papers and consultancy journals and magazines and so forth. I wrote it for several reasons. The number one reason was that I believe two things. No one had truly defined strategy systematically as based on a model. And even though people have come very close to defining it by intuition and maybe inspection. And the other is that I didn't believe that people had truly integrated complex adaptive systems thinking, emergent thinking into what strategy is and how to create it and how to implement it. And so those two things were my guiding reasons for adding more noise to the strategy industrial complex here.
All right. So you just mentioned that strategy, we have used strategy for centuries, but we've not actually defined it. So,
people have defined it. I should know. Many people have defined it. I don't think that it has been defined completely and properly, and it hasn't been derived from a model of change and innovation. And that's what's required to really understand strategy, to link it to a model of change and innovation. And that model of change of innovation has to be based on emergence, on the view of adaptation instead of planning the future.
Right. So I think that the business strategy so far has been static definition. You can say that. So
perhaps static definition. I think many people have come close. Richard Rummelt has come close. Roger Martin has a lot of elements of it that make sense. Soul. There are others, but I don't think anybody has brought it all together in one place and shown the real derivation and the real connection between all the elements of strategy. Execution, implementation. What's the difference between a strategy and a tactic? What's in the way of the strategy, and how do you define it? How do you find the strategy? I put these together in a very comprehensive way that I don't think has been done before.
And so there have been definitions, but you have a different approach to strategy, or different definition to strategy. So what, according to you, is strategy?
A strategy is a central rule, a central policy that guides all the actions and decisions of an organization towards, and I use the term busting the bottleneck to achieving the aspiration of the organization. And what I mean by busting is getting around, overcoming, eliminating, reducing whatever is in the way of achieving the aspiration in that organization. And this definition, it resonates with a lot of what Rummelt says. It resonates with Sol and others. But I don't know that anybody has stated it as explicitly as I've stated it.
Yeah. And I love that your definition. You said that strategy compared to a hero's journey.
Yes, who's the villain? The villain is the bottleneck.
Right.
Exactly. Every story needs a villain, and the villain in the strategy world is what's in the way of achieving the aspirations. Too often people just jump from, here's the aspiration, and what I mean by aspiration is could be a specific goal, could be a vision, could be a mission, but it is a future state, a desired future state, an articulation of a desired future state. Many people just start writing lists of things to do, lists of choices, lists of plans, lists of initiatives to achieve that future state. And I say, no, a strategy is never a list. It is a policy or a rule. And it isn't designed directly from the aspiration. It's designed by understanding the bottleneck, what's in the way of the aspiration.
So aspiration is the goal that you want to get, right?
Aspiration is the desired outcome. Yes.
Right. And the strategy is the way you get around all the troubles, all the hindrances on your way to that aspiration.
It is the way, the strategy is the rule that enables all the people in the organization and all the functions in the organization to be working consistently to reduce what's in the way. And okay, so let's use an example. Say a product line has grown, but profitability is very poor. The growth has been good, but the margin, the profitability has been poor. And leadership says, not satisfied with this, we need to make more money on these sales. So the aspiration, the goal, is to increase margins. And that goal might be expressed in terms of, a percentage margin increase, over 2 years or something like that. We're going to increase margins by 10% over 2 years. I don't care. Whatever you want to say is the goal specifically. You can't just start writing strategy lists, but this is what most people do. Well, we'll reduce the cost of suppliers, and then we'll reduce the supply chain cost by economizing on warehousing, and we will increase prices, and we will do marketing in a better way. And we start listing every possible aspect of a business that could reduce cost or increase price and increase margin. But that's a laundry list, and it has nothing to do with a strategy. You have to have... Go ahead.
So if it's not a list, what it is?
It is a rule. So for example, in this case, the team would have to ask themselves, what's in the way of higher profitability? What's keeping it from occurring? And you might get answers like, we've grown fast because marketing gets everything they want. They get to add features to the products, or they get to get new packaging, or they get new sizes, and you name it. Whatever the product line might be, marketing gets to request and demand all these features and all of these diverse offerings because they know they can sell them and they can grow, but they don't have a concern or an awareness for the impact on cost, the impact on supply, the impact on manufacturing, on supply chain, on quality control, on yields, on turnovers in product cycles, and so forth and so on. What if that were the real reason for low profitability, low margin. You wouldn't just have everybody working on anything. You would have a program that starts to reconcile this problem. You would have a program where there's training, perhaps, where marketing becomes aware of the implications of what they do, or there might be a product manager put in place that has the authority to make decisions where you're not allowed to put in a product with new features until the cost has been decided to be relevant or decided to be reasonable. Or let's say a strategy rule could be this. The strategy rule could be, we're going to launch fewer products and spend more time on figuring out how to reduce the cost of the products that we do launch. That is a strategy rule. That is a policy that would enable all the people in all the functions in the company, sourcing of raw materials, manufacturing, supply chain, quality control, marketing, everybody would be in that game and would recognize the task, but the rule would give the time to focus on cost instead of just putting out as many products as you can per time and raising sales numbers.
So, as per your definition, as per your explanation, strategy on face value seems very easy, right? So you identify what is your aspiration, you identify the bottleneck, and your strategy is, I want to minimize that bottleneck, and this is how we are going to do it. Or a statement that this bottleneck must be reduced, and we are going to do this by this. And there may be a set of goals, other goals, sub goals, and plan and a list, but it will come later, right? Strategy is just identifying. Yeah, please.
Exactly.
Right.
The lists come later.
Right. So strategy is just first identify where your problem lies. Identification part seems to be the most important. Yeah. If I'm correct.
The identification of what's in the way is absolutely the most important. That's the magic. Once you've done that, then you start to make sense of what you might have to do. That is exactly correct. Then the lists of initiatives and plans and metrics can come.
So your book, the title of your book is The Emergence Approach to Strategy. When I think of emergence, I have this picture in my mind that there's a sculptor, right, who has a chisel and his hammer, and he's hammering a stone, and deliberately, and it chips away, and after a certain period of time, beautiful sculpture emerges from that. So, is your idea of the emergence strategy a similar thing there?
That is an interesting analogy, and people have used it. In my mind, what emergence really means, maybe a better analogy is social insects, hives, ants. Ants are the best, a wonderful example, right? No ant knows what's going on in a ant nest, yet they have all kinds of functionality. They have coordinated methods for finding food and communicating where that food is. They have coordinated methods for beating off attackers. They have graveyards. They know how to feed the young. They know when to make males and when to make females and when to make queens. They know when to move the nest. All these things, yet no ant knows what's going on. They just communicate by chemicals and a few visual and physical cues. From these local small interactions, this wonderful complexity emerges of the functionality of the nest and of the swarm of the, and bees, I guess we use swarm more for bees, but for the colony, the ant colony. I think emergence means taking that to business, and it relates a little bit to your example of the statue. You can't know the outcome you can't work directly on the outcome. You can't work directly on profitability. You have to go back to things, very local things that you can do, the actions that you can really take. Deciding what those actions are, those local actions, is the hard part. And that's why it's so seductive to write lists, because you think, well, we'll do everything. And then that will emerge as higher profitability, but it's not true.
Right. So let's say a CEO identifies a problem as a strategy there, and that is communicated to other departments lower than him, right? And so they have their own strategies, and like you said, of that kind doing their work. So they go and do the little part. Everyone goes and does their little part, and as a combination, it emerges that the strategy is being applied. Am I correct in this assessment?
That is right. I wouldn't call it little parts, but I do understand why you said it.
Right.
Everybody has their role. IT has a role, manufacturing, and then you can break manufacturing into many different parts. Sourcing of raw materials, process capability, equipment maintenance, and on and on. But just think of the difference between listing every aspect of running a business and saying, I want you to reduce cost on every aspect of running a business. That's not a strategy. Well, I guess you could call that a strategy, but I don't think it's a very good one because it doesn't ask what's in the way. So for example, what if you should raise the cost of one aspect of manufacturing in order to allow a lot of others to reduce cost? What if you should buy raw materials that enable you to be more flexible in manufacturing? The cost of the raw materials will go up, but the overall cost of the system may decrease. You would never see that in a list-making exercise of asking every function in the company to reduce cost. There's a more sophisticated analysis there. That would come out that the bottleneck is that we buy such inexpensive raw materials that we end up having to add enormous cost in manufacturing for dealing with yields and dealing with quality control, not to mention storage and warehousing and inventory.
Right. So the strategy grows from the top, or it comes up from the bottom?
Neither. I'm really glad you raised this issue. Many people think emergent strategy means bottoms up, as if all the people on the manufacturing shop floor or every salesperson is going to create the strategy and bubble it up to the top. No. Emergence doesn't mean organizational hierarchy. It means that the results emerge from local interactions. To create an emergent strategy and to create strategy in an adaptive, emergent way, and the two words are very related, ideas come from anywhere, top down, bottom up, sideways. It doesn't matter. It's the synthesis of ideas that matters, not where the ideas came from.
So can we say that, let's say, the initial first identification of the problem and initial strategy, like we found problems in the marketing or say manufacturing, we've identified that. And now, let's say the CEO goes and says, we have problems here, and to all the departments, to all the people down the line, he asks for ideas on how to achieve that. So everyone has their own initial strategy on what they could do on their specific function. And others flow back, and the combination of that strategy then becomes the final strategy.
I don't think there is ever a recipe for how strategy can be created. You did describe some good elements. Whoever is leading the strategy process, the development process, must reach out to understand what's going out throughout the organization, because they have to create a hypothesis of what the bottleneck is. And they have to decide, in a sense, what strategy formulation is a modeling exercise. It's a hypothesis exercise. And I present and others present guidelines for how to do this, but it can't be sequential. It can't be a recipe. We'll interview people, then we'll get some data from some consultants, and then we'll sit in a room and we'll do Post-its on the wall, and then we'll decide. No, it's an ugly, messy, complicated process of trying to truly understand what's going on. That's what Rummel uses that term. What's going on? What's really happening here? There's no recipe to doing that. I describe it as solving a puzzle, which is maybe what you were trying to go after with the statue analogy. I think a puzzle does it a little better, that you don't have a picture on the box top, just like you don't know what the final image is going to be that the sculptor is trying to create, right? They can only hope that if they locally take a little off here and a little off here and do something over here, that eventually the final product will emerge as to what they want. So in that sense, it's a very good analogy. I like the puzzle one because there are a lot of pieces. You'll never have all the pieces. You don't have a picture of what you're going after because you don't know the future. And I think it's a very good analogy, puzzle making.
Right. And where does change and innovation come into picture on your area of emergence?
Well, I think the words, especially innovations, it's used. I don't think it's used in a very good way usually, in the sense that it's used only when really brilliant, new, successful stuff occurs and we look backwards and we say, wow, that was an innovation. Every change, everything new, whether it's small or large, is an innovation. Any goal, to reach any goal, any new aspiration, any desired future state requires some kind of innovation. Always. Right. Something new that wasn't there before. And that's all strategy can be for. There can't really be anything else except for trying to change a current state to some future state. As we say, even standing still requires innovation and change because the world around you is changing.
And we also talk about the killer problems of change and innovation. So what are those?
We talked about them a little bit before. The killer changes of of change and innovation. They come out of this model that I've created that I use to define strategy and execution and tactics. The killer problems are that for any aspiration, any goal, any vision, any mission, the number of actions and decisions and choices you have to make are enormous in an organization. And there are some real problems with making choices. They have to be coherent and consistent. There is a time delay between the time you make a decision and the time you find out the result of that decision, right? In our example where you're trying to reduce the cost of a product line, you might have to run trials in manufacturing for a year and a half to really know if you've reduced costs meaningfully and whether you've done it in a way that is acceptable on the market side. After a year and a half, you may not have the answer. So you have a time delay that can be in some industries very long between decision, action, choice, and outcome, results of that choice. And then a third killer problem is there are influences beyond your control, by definition, right? So you've decided on a cost reduction scheme for your company, and then all of a sudden the suppliers change their mind about how to play. Or a competitor comes in with a new product that is beyond what you're already doing, and you can't afford the time to cost reduce because you've got to make a competitive product, or a regulatory change, whatever it might be. So these are the three basics of the killer problems of change and innovation. You have so many decisions and choices and actions to take, but they have to be done coherently throughout all the functions and organizations. There's a huge time delay between choice and result. And the third, influences outside of your control. I call these the killer problems of change and innovation. And then we ask, what's the solution to those killer problems? And it turns out that a central rule is the most powerful solution.
We spend quite a lot of time thinking about strategy, and then it has distilled down to this your emergence approach to strategy. But I think I'm taking a break here because I'm not actually introduced you up till now, and but I also wanted to know how you came about thinking so much about strategy. What's your background? What made you think about it, write about it? So if you can, you know, show your give your life trajectory that has led you to this emergence theory of strategy.
Be happy to, but I'm going to be brief. My interest in strategy didn't start with strategy. It started with creativity and innovation. My interest in creativity and innovation. I grew up in a musical family. As you can see, I'm a musician, but then I studied chemical engineering, and I got my PhD in chemical engineering at City University in New York City. And then I went to work for DuPont, where I worked for 25 years. Throughout all that time, and I had a very diverse career at DuPont. I worked in venturing. I worked in old commodity products. I worked in supply chain planning. I worked in marketing and business management. And I saw the same patterns of change and innovation and creativity in music, in pure science, in engineering, and then in business and all the facets of business. And I came to a conclusion early by reading a few things, and also by just maybe I just had a natural way of thinking this way, that it is an adaptive emergent process and not a vision process, not a planned process. I felt as though the strategy writings and the strategy approaches and the innovation approaches didn't capture this. And I think I said this in the beginning. There was no definition of strategy and methodology directly linked to emergence and adaptation the way I thought it worked. And that's what led me to write the book.
When you were talking about music and when we are talking about change and innovation, there's a creativity part there.
Yes.
And so the strategy has a creative sense in it, or it doesn't.
I think any change requires creativity of some type. And I know we like to reserve the word creativity for artists and unbelievably new product ideas and things like this, but I don't see why a great accounting system that teaches people what the impact of their actions are can't be very creative and very important too. So I tend to see the word creative much more broadly. But I think this is the key thing. I think that people treat creativity as free thinking and imagining. And there is a part to that. There is imagining and free thinking in creativity in any field. But that's not the heart and soul of creativity. The heart and soul of creativity is discipline and rigor. But it relates to this concept we talked about before, not at the high level where you get the answer. It's at these low-level interactions, these local levels. A lot of that goes on in the mind. Creativity is a very harsh, very hard thing to do and requires enormous discipline and work. My book tries to promote the reality of that and give guiding principles for how to do that and how to be rigorous. So creativity is part of everything. It's a matter of degree as to how people usually think about it.
And when you are talking about strategy, you try to exclude or get rid of things that are not strategy. So you talk about disqualifiers of strategy, the 5 disqualifiers. What are those, and how does that help on identifying whether something is a strategy or not?
This is good. The 5 disqualifiers are a set of tests of strategy that help you decide whether or not your statement is actually acting as a strategy, is actually functioning as a strategy, or is it instead a goal, a plan, or so often just a cliche. So, for example, our strategy is to improve our profitability by 15% in 2 years. What's the opposite of that? I'm sorry. The second test is that if your statement has numbers, it's almost never a strategy. That is a goal, right? Or the first test is the opposite absurd of your statement. So let's make one up that's absurd for the example. Our strategy is to find the right balance between cost and revenue in our company. It sounds smart, but it doesn't really give any information. Who would suggest finding the wrong balance of cost and profitability?
It's like saying,
cost and revenue. I'm sorry.
An accountant saying that we will give the best service to our clients.
Yes, our strategy is to give the best service to our clients, or excellence in service, or to be the premier supplier of what we do. What, are you going to be the worst supplier? What information does that give? And then there's other tests. If it's a list, it's not a strategy. So, for example, our strategy for improving the profitability of our product line that has grown quickly, the example we've been talking about, is to reduce the cost of raw materials, reduce the cost of quality control and the time it takes to get quality control data back, reduce warehousing costs, reduce inventory. Just go down the line.
Right.
Not a strategy.
When you are talking about strategy, you also talk about strategy alternative, identifying different strategic alternatives and then pitting them against each other. So how does that work?
Strategy alternatives is a crucial idea, and there are others who talk about it, Roger Martin and others. It is very hard to just come up with one idea for solving your bottleneck, for busting your bottleneck and achieving your aspiration. You usually, almost always, have to compare different strategy options and evaluate them to find out which one is best. And this relates very heavily to your topic of accounting. How do you evaluate them? How do you evaluate 3 options for reducing costs? And I think one of my messages is you could never do this with numbers alone. You could never calculate a return on investment, an MPV, an EVA, an IRR. I don't care what you use. Whatever aggregate financial number, you could never calculate, let's just call it ROI, for a given option. The only thing that has meaning is looking at relative evaluation.
But as accountants, I think our first instinct is to go that way, right? Between different strategies or different capital budgeting alternatives, we try and find the best alternative that is giving us the better NPV, and then we say that is the better strategy.
I argue it can't be done that way. And the reason is there are so many parts of innovation and creativity and change and leadership that can't be put into numbers. How are you going to put complexity into a number? Is it really worth it to make up some kind of complexity scale and then turn that into dollars or whatever your currency is in your country? I don't think so. I recommend using a combination of numbers for the things you can estimate numerically, like, for example, the cost of a raw material. But there might be aspects of raw material that you can't put into numbers, like the relationship with the supplier. For example, will they work with you? Will they innovate with you? Will they find solutions with you over time? You need to put that into dollars. What's the point of putting that into dollars? So I have what's called a strategy alternative matrix. The second half of the book is all about how to design strategy, and this strategy alternative matrix is a centerpiece of that. And I say use words and numbers. You develop what's called fitness criteria that you can debate, study, model, argue about, and eventually internalize so that you can see whether one alternative is starting to emerge as the best one. And in the spirit of emergence, I say you don't even pick the winner. You let it come to you. You work so much at the details and trying to internalize what's going on and get feedback from all the stakeholders that are involved until one of the alternatives starts to emerge as the winner.
Right. So
But it
when
can't be done by numbers.
we're talking about numbers, so those numbers or those metrics are not strategic alternatives, but it can be used as criteria to evaluate an alternative.
Say it again.
So the metrics or the NPVs that we're saying, the financial metrics, they cannot be strategy, but they can be criteria for evaluating a strategy alternative.
Yes, I call them fitness criteria fitness criteria to judge whether one strategy is more fit than another for the challenge of achieving the aspiration. And you can create many criteria that help you make that judgment. Some would be traditional NPV, ROI, EVA factors, like maybe you model sales price, model it. It's going to be a range, right?
Right.
But you could model that and put it in a number. But I don't know if you can model, not only, I use the complexity often I think about as something difficult to model in simple numbers. How about whether or not the organization can understand it very well and internalize it and really get behind it? Wouldn't you care about that as a leader? How do you put that into a number, into a dollar amount in an NPV calculation or an EVA calculation? I don't think it's worth it. You could do it. You can use weighting and all kinds of things like that. But I think it's better to leave it there and talk about the complexity and talk about the difference in how the organization would get behind a given approach, one of the strategic alternatives versus the other one. So it's a combination of words and numbers, concepts and models.
But wouldn't you say that both would be important on identifying the fitness of an alternative? So we're also looking at NPVs, financial metrics, and also the other non-financial metrics, whether or not the strategy will be understood and taken up by people, whether or not it will be a good fit for the culture. Because both might be important. Just going with whether the strategy will be owned and used by everyone in the company, but also the financial metrics, how profitable we are going to be, how profitable this strategy will be is going to be. So I think there might be a certain evaluation that's between two alternatives, and we might need to decide upon we are going for better profitability, or better execution.
Well, here's my argument. I think they're all financial metrics. They're all financial, meaning they're all influences on ultimate financial performance. Okay. Now, let's not add something that you would be doing for society, for example, that is not, you don't expect a financial return. Put that aside. Okay. For a company that's just looking to talk about the profitability, the financial return on a given strategy alternative versus another one, I believe all the things I talked about are financial influences, complexity, whether the organization can get behind it, whether leadership can truly support it. What makes them different from traditional financial numbers that go into MPV and EVA calculations is that they're not easily put into a cash flow. They're not easily put into either a revenue, a cost, or a working capital number or a CapEx number. But that doesn't mean they're not financial. Everything's financial. It's that you can't put it into financial terms in a simplistic way, and that by trying to do so, you lose all the information. You lose all of the richness of the analysis.
So,
And there's
instead of putting those into numbers, to favor having conversations about the things that we cannot put into numbers.
well, it's more than conversations. In the matrix, you have to evaluate and assess every concept, including something like complexity or whether the organization can get behind it. You have to assess it, meaning you have to give a judgment that strategy A is more or less complex than strategy B. And you have to put words behind that in the matrix. And people have to understand what those words mean. So it's not like you just have a discussion. It's that the answer, the conclusion, is not put into dollars or necessarily numbers. But the conclusion is put, I believe we've all agreed that for all these reasons, strategy 2, even though it appears to give better numbers for revenue, is actually an inferior strategy because it's so complicated. There's so many ways that things can go wrong, and so many ways that we can get distracted, and so many ways that things can be different than we thought, that actually we're going to debit number 2. I forgot which one I said was more complex. Which one it was. We're going to debit that. Now, saying we're going to debit $10 million a year, I know that. I think that only obscures the understanding. I think you have to internalize it, and the team has to internalize it, and they have to understand why you're thinking that way. But it's all in the matrix. It's all there.
For an accountant, it seems to be quite a mental shift because what we focus more on is the metrics of the financial numbers. And if there is drawing up positive numbers, they bigger than the number that is the outward or the better. But I think that's why we should understand in long run or in that sense, because if the people, the organization cannot be behind a specific strategy, whether or not the profitability source is big, it will not be achieved. Right?
And what's the financial impact of not being achieved? You
Right.
see, it's all financial. We're just seduced by numbers that are easy to get. Here's a list from chapter 15
Right.
of things that are all financial, but that financial analysts could never find a way to put a number on, a dollar. So we've talked about complexity a lot. Number of organizations and functions, organization structure change required, newness of markets, technologies, number of dissimilarity of products and services, hard to explain. How about opportunity cost?
Right.
How are you going to put a number on that? How about impact, value to society, sustainability? What's the probability of the community where you operate viewing this approach positively versus negatively? Does that not have financial implications in the long run? Don't all these things have financial implications? How about diversity? How about flexibility of optionality? I mean, all of these are financial, they're just not easy to write down in a gap analysis. They're just not easy to write down and model in traditional, how do we add up the number that we pay our taxes with?
Right.
So I argue they are completely financial.
Okay, so I also wanted to ask you about this nested framework of strategy. That there is not just one strategy for a company. There might be several, depending upon each role or the functional department. How is that possible? Why cannot there be only one strategy? Uh, Even if there can be multiple strategies, how can those all align to one another?
The concept of nested strategies is also one that's been around for a long time. I think the difference in my approach is how do you think about it and how do you actually do it? But the basic idea is if you have an organization with different functions and different business units, those functions and business units also need to have strategy for achieving their specific goals. And every strategy is nested under the CEO's strategy, the overall corporate strategy. And the bigger and the more multifaceted a corporation is, with different business units and regional organizations and different functional organizations like IT and manufacturing and supply chain and HR and so forth, the more of these nested strategy frameworks you need. So in our example of trying to reduce cost or increase profitability, not just reduce cost, the raw material people, the people responsible for raw materials may have to have a strategy just their own to achieve their objective. Remember, we talked about the possible solution to the profitability problem as buy higher quality raw materials to enable much more flexibility downstream in the manufacturing process and in the inventory process. Now, it might require a strategy for the buying people, sourcing people, raw material people to achieve that, to find a higher quality source, or to find the best higher quality source, or even to encourage a supplier to create a higher quality source of raw material. Their strategy is its own separate framework, but it has to be consistent with all of the peers, all the other strategies in the organization, and it must be consistent with the CEO's strategy. And nesting is absolutely required in any kind of business or any organization that has these multifaceted concepts.
I think those are my questions. Is there anything that I might not have touched upon that you would like to discuss?
Well, I do, because of the accounting part of your
Right.
podcast. We touched on it a little bit, that one of the great barriers to strategy design and strategy thinking is trying to put everything into a number for calculation of an aggregate financial concept. NPV, ROI, VA, IRR, I don't care. They're all the same to me. In sense, they're all the same. They're all wrong for evaluating strategy. I believe EVA is quite good, or some of them can be quite good for evaluating past historical events. And, can you make an ROI work occasionally for something? Yeah, maybe. But in most cases, I say no. That you need words and concepts in there to truly internalize whether one strategy is better than another.
Right.
But I have a few other points. Using the accounting system with all of the allocations of cost is also usually the wrong way to evaluate product profitability and strategy profitability, because these allocations do not reflect what happens when you add or subtract a product, or add or subtract a feature of a product. The whole idea of accounting systems is to attach every cost to something, right? Yet, if you have a product line of 100 products and you take away the 3 supposedly least most profitable products, a great deal of cost doesn't go away at all,
Right.
right? So, accounting system is just wrong for doing strategy analysis.
I think it is an occupational hazard, if I may say it. Because like you said, we like to put everything into numbers, and if there is no number attached to it, then we go crazy, right? If it is not accounted for, even if
Yeah.
we say we are accounting,
Yeah.
if we cannot count it, we will not account it.
Right. And I think the problem, what makes the accounting system so dangerous for doing decision making and strategy design is that it's so easy to get the numbers because they're all there. We'll just pull it from the accounting system. But they're by definition the wrong numbers usually. And this is true whether you do standard costing, activity costing, it doesn't matter. Every accounting system by definition must account for all the costs. And in most decisions, all the costs are not relevant, only some of the costs, and you dilute your focus. There's other problems. The accounting system doesn't account for cross relationships. I give the example often of if you're selling paint. If you sell paint, you need to have red paint as part of your product line, right? If you don't have red paint, nobody, no hardware store, no big outlet store, nobody is going to buy your paint line, right? If you don't have red paint as part of it. So then how could red paint even have a profitability associated with it? It can't, because you can't independently remove or add red paint to a product line. It has no meaning. The profitability of red paint has no meaning. Only the profitability of the entire paint line with a given formulation of red paint could have meaning. And yes, you could compare 2 red paints and say one is more costly than the other, or one raises the revenue of the entire product line, but you can never talk about the cost, the profitability of a can of red paint, because it has no meaning. So these cross relationships never come out in the accounting system, where you have to go to a higher level of aggregation to see profitability, like an entire paint line.
Right. So this example is where an accountant works for an organization, right? But if you are a practice owner, so similar thing happens here. So if you are giving tax advice or other financial advice, you do not have to have it, but it's most preferable that you also have bookkeeping services, right? If you have like the red pen, you should also have bookkeeping services for you to be able to provide tax and other services. But if we just remove bookkeeping from that whole mix, the single entities or bookkeeping advisory, so they have no, they only have meaning, or they have a profitability, or they have business only when they are one. If everything is under the same group, and then only everything ties up, and you have a business as a firm owner.
Exactly. A unit of a business or a product only has meaning in a profitability analysis, where you can say the profitability of that unit or that product is X. It only has meaning if you can take that product away or that unit away, right? Or else, what meaning does it have?
So yes, Peter, do you have any more things that you'd like to delve into? This session has been quite, eye-opening for us as an accountant, because for us, strategy or everything is tied to financial metrics. And as a firm owner, if you are working for, or if you are advising on the financial side only, then it's well and good. But if you are running your own practice, then You cannot just look at the financial metrics. You will have to be more strategic. You'll have to see other non-financial uh, sectors, non-financial elements as well, which, like you said, they are also financial because they will directly impact the business. But when you look at the face value, it does not look like a financial metric. But you'll have to put that in your analysis if you want to grow, or if you want to have more profits in your business, if you want to you have a certain goal of reaching, let's say, $1 million in revenue, then not just the financial elements, there are other elements that you need to take account, like let's say marketing, or the service that you are giving, not just the number of clients, or how much each client is bringing in. So those metrics and what strategy you are going to pursue to also bind everything together is quite important. So that was quite eye-opening, and I think my audience and viewers can also agree and take some advice from there. Before we go, I'd also like to ask you, we have had a long conversation, and if there is only one thing that you want the viewers, you would like to you would like them to have uh, take all the information that we have provided in this conversation, but if you wanted just one thing you should internalize, what would that be?
Well, we talked about two separate things. We talked about the accounting angle, and we talked about strategy. Of course, they're related. So I'm going to do one for each, okay? For strategy, it is eliminate your lists and start with the question, what's in the way of the goal? The bottleneck. Focus on the bottleneck and the question of the bottleneck. On the accounting, it's what you just summarized. Everything is financial, but just because you can't put it into a traditional finance number doesn't mean it's not very important, and you have to find a way to consider them.
Okay, so last thing, I think the approach, the emergent approach to strategy is quite a fascinating approach, a different approach, and more practical, from the traditional approach. And if you want to get a hand on the book that he's written, where can we find the book if you want to purchase it, Peter?
Of course, it's on all the online outlets, obviously Amazon and Barnes and Noble, and in various countries. It's in many online outlets. And if you just search for the Emergence Approach to Strategy and put my name, you will find it online.
Yeah.
You can also go to the website, emergenceapproach.com, and there's quite a bit of supplemental material there where you can learn more about the approach and see some more examples. For example, of the 5 disqualifiers. There's more examples of the 5 disqualifiers, the tests of strategy.
Right. And I'll also put all the links in the description or on the show notes, so it will be easier for everyone to click and go to the links. And Peter, so if someone wants to connect with you, reach out to you, where can they find you?
They can use the links for contact on the website, emergenceapproach.com, or they can send it to Compo, COMPO, at emergenceapproach.com.
Okay, Peter, so this has been a very good conversation and quite eye-opening, I can say that. And for all the accountants, those are watching, and the strategists that want to understand the new approach and do their strategy better, I think they find this conversation useful. I hope that, and I think with this we'll end our conversation here. Peter, thank you very much for joining me today.
Thanks for having me, Sushil.